a day on your money. 1% a day, every day, 365 days a year. You would double your money in about 3 months, okay? You'd triple it right at the 5-month mark, and you'd multiply it 14 times over just the first year. Is this something that you would invest in? Obviously, you would, right, if you could do it. Well, you'd be crazy not to. Luckily, this is a real opportunity, and you can take advantage of it right now today. By next week, your money could start earning around 1% every 24 hours. Now, it sounds too good to be true, I know, and that's what I thought too, so I had to test it out, all right? So I put some money in it. I started out with $10,000, and sure enough, I was earning about 1% a day. A few weeks later, my balance was up to $12,231. So I put some more money in, and then some more, and it kept on making me money. Jared and Karen here in the office saw what I was doing, and they went in on a piece of the action too. So did my wife, my kids, my friends, and a bunch of people that I do business with. And guess what? Everyone has made money so far. I'm up over 273% and counting. Plus, I've already got out all of my seed capital. Now, I can keep on letting it compound every day, or I can take out some money when I want. It continues to pay like clockwork every day. 1% a day, every single day. And the best part about it is I don't have to do anything. I don't have to place a single trade after it's set up. I just put my money in, press start, and it goes to work for me. So instead of me working for my money is working for me. All I have to do is check the balance and take out some of the profits here and there. So if you're interested, I'll show you how to open up your own account. Do y'all want to see how this works? Now, I'm going to pause in between this webinar at strategic places, not on purpose, just because of my throat. And I'm going to drink some tea and then some water. Much better. All right. All right, so first, let me clear my throat. Dang on. And we'll have an overdose on Halls, I'm telling you. Sorry, guys. First, let me clarify something. Let's clarify this return, okay? This is important. It's actually a hair shy of 1%. We have had 1% before, but it's rare, okay? It actually varies from day to day. Sometimes we get like 0.85%. Sometimes we get 0.65. And so the results vary a little bit. But the results just for November were, there you go, 0.65% on that day. But the total results for November were 21.85. The average is about 0.73, or about 23% a month. October was about 22.87. September was almost the exact same. And I think the return I got on that month was 23.2. So it's averaging just over 20%. And like I said, 1 month will be 23, 22, back to 23. So the average return is 0.73. As long as I'm making 20% a month, that's all I really care about. All right. I say 1% just because it's easier than me saying 0.735% or 0.75%. But everything that I'm going to show you is based off of the actual historic returns that I've gotten, not hypothetical returns. Does everybody understand that? Does everybody understand? I just want to make sure, does everyone get that? Like, I'm going to say 1%. It's not 1%. It's 0.75% or 0.735%. It's just easier to say 1%. Plus, I think it sounds cooler. All right. But everything that I'm going to show you is based on the actual returns that I'm getting, not hypothetical. Does everybody understand what the difference between hypothetical and actual historical are? All right. Actual historic is actually what I'm actually doing. Hypothetical is somebody made that shit up and back tested it and there was no money involved, right? All right. So for example, in this chart I'm showing you how fast 10,000 would grow is based upon the actual 0.73% daily return, okay? Again, it's just easier for me to say 1%. All right, so obviously this is not a savings account. There's not a bank on the planet that would pay you 1% a day. Hell, most of them won't pay you 1% a year nowadays. The account has nothing to do with banks. It's actually a very unique investment account. It doesn't invest in stocks, options, futures, bonds, real estates, notes, gold, CDs, or any of that traditional stuff that you're used to. The account buys and sells. Are you guys ready for it? Cryptocurrencies. I know everybody just said, oh no, not cryptocurrencies again. It's not what you think. It's not doing what you think and how it's doing it, because it doesn't hold cryptocurrencies. It doesn't try to guess whether the prices are going up or down. Instead, it buys and sells them across different exchanges to take advantage of the price differences. It's a unique term and technique known as arbitrage. Is everybody in here familiar with arbitrage? If you are, give me a yes. If you're not, give me a no. I just want to see what the crowd is about here. A technique called arbitrage. Okay, we got some yeses and some nos. All right, so I'm gonna get another drink here. Let's go through a simplified explanation of what arbitrage. This is how it works. Let's say that Walmart is selling a DVD for $10, but on Amazon it lists for $15. You could go to Walmart and buy it for $10 and then sell it on Amazon for $15. You'd make a profit of $5. That's arbitrage, buying an asset on one market or exchange and then selling it on another market at a higher price on the other market or exchange. Now, that's exactly what the 1% is doing, except it's doing it with cryptocurrencies. It finds the biggest price spreads and automatically sends buy and sell orders to take advantage of them. Now, the example that we just went over about DVDs and Walmart and Amazon is very, very simple to understand. But it does still have some risk associated with it. For one thing, Walmart, how about Walmart? Walmart could run out of DVDs and your market would dry up. They could also raise the price, or the price might go down on Amazon. So you basically have to buy and sell them really quick to be able to take advantage of that. What you really want to be able to do is to buy and sell them at the same time. That way you can guarantee your profit. If you buy at 10 and sell at 15 at the same time, you can't lose. So where can you and I do that? Where can we buy and sell instantly? Does anybody have any ideas? The best guess, a lot of people say is like eBay, and I'm like, well, not really. So the only place that I know that you and I can do this is the financial markets instantly. Let's go through an example if we use Apple stock, okay? Let's say if Apple stock is trading for $200 a share on one exchange and then $210 on another exchange, you could buy it on the cheap one and then sell it on the other one and immediately book the profit. Here's the problem. Apple only trades on one exchange, the NASDAQ, okay? As a matter of fact, currently all stocks only trade on one exchange. They're either listed on the New York Stock Exchange or NASDAQ. That's it. There's no arbitrage. Same thing goes with options, futures, ETF, pretty much any other regulated market out there. But guess what doesn't? What financial assets trades on more than one market or exchange? That's right, cryptocurrencies. Cryptocurrencies are still an unregulated market. They're still new. They're still the wild, wild west. The regulators have not gotten their dirty little hands on them yet. So Bitcoin might be trading for $6,000 on Binance Exchange and then $6,100 on Bitrex. You could buy and sell at the same time and book an instant $100 profit. All you would need is an account at both places, and you could pull that trade off. Now, arbitraging as a concept is not new. Hedge funds used to make a lot of money doing the same type of thing, but they did it slightly differently. What they would do is they'd buy a basket of stocks in the S&P 500, and then they would arbitrage them out into the futures markets if the price difference was either up or down. Okay, and they have to do it with large accounts and a lot of time, multiple times throughout the day. The godfather of this strategy was a guy named Edward Thorp. He was a mathematician who figured out how to use arbitrage to trade stocks. Between 1974 and 2010, he made around $800 million with an automated system that he ran from his beach house in California. Thorp was able to average 26% return for 30 years. That's better than Benjamin Graham, John Templeton, George Soros, Carl Icahn, and Warren Buffett. But here's the thing about Thorpe's strategy. He had to have a huge trading account, and he had to do a boatload of trading. By the year 2000, his system was making over 4,000 trades a day. He traded more than 1.5 billion shares a year. That's billion with a B. That's what you have to do if you're going to do this type of thing at scale, when you're only making a few pennies per share. But with cryptocurrencies, at least for right now, there's still a huge arbitrage in the spreads. And they happen all the time. Here, let's take a look at 3 examples on Bitcoin. You can make $180 in profit if you buy Bitcoin on Bitflyer Exchange and then sell it on Gemini Exchange. Or $76 if you buy on Gemini and then sell on Bitrex. Or $79 between Bitstamp and Bitfinex. And that's just Bitcoin. Let's take a look here at a scan that I pulled the other day. This is just 3 cryptocurrencies: Ethereum, Bitcoin, and Litecoin, across only 4 exchanges: Kraken, Bitstamp, Bitrex, and Yobit. I have no idea how they come up with these crazy ass names. Any one of these would instantly book you a 2 or 3% profit instantly. Now look, this is just 4 exchanges. Does anyone have a clue how many exchanges there currently are in the cryptocurrency market? How many exchanges are there total? Go ahead, guess while I get a drink of water. All right, I'm getting a few answers there. All right, as of a few months ago, there are only 194 different exchanges. Think about that. 194. You couldn't get all those prices to match up if you tried or if you forced them to. Here, let's just take a look at the top 60. And good luck trying to pronounce more than 2 or 3 of them. I mean, look at the names like Crowbit, Yobit, IDAX, BitPay. Some of them I can't even try to pronounce because I'm going to sound like a moron. But look at those crazy names. Now, how many arbitrage opportunities do you think there are across 194 exchanges? There's a ton. More than you and I can count or take advantage of. The account I'm telling you about makes these trades automatically. It uses an algorithm and it scans the exchanges and automatically takes the trades with the largest profit potential. It buys and sells them instantly. And I walk away with about 1% a day, every day, like clockwork. Is everybody starting to get this? Does everybody understand the core concept that we're going with here? All right. Well, it gets even better. There are 194 cryptocurrency exchanges, and the differences in those prices gives us a huge advantage there, okay? But how many coins do you think there are? Not just exchanges, but coins. I mean, everybody knows about Bitcoin. Most of you have probably heard about Ethereum or ETH. And then there's Litecoin, Ripple, Tether, Bitcoin Cash, and all the other crazy ones, right? How many do you think there are total? Go ahead and guess. Let's see who can get the closest. That's not bad, Eric. Bruce, that's not bad. Greg, you're way off. Brian, too high. Rod, you're pretty close. All right. As of last week, there are only 2,089 different cryptocurrencies. And heads up, new ones are made every single day. That's 2,089. So here's the situation. Here's what we got. And this is why this is such a big opportunity right now. There are 194 different exchanges trading 2,089 different coins. And this goes on 24 hours a day. And they all have different prices. 24 hours a day, 7 days a week, 365 days a year. With no regulation or central exchange yet. Okay? So you have the exchange, you then have the coin, and then you have the currency that it's quoted in. That's 3 layers of arbitrage. So here's how you can make money with that. You can buy Bitcoin with Japanese yen on Bitbank exchange, and then you can transfer that Bitcoin from Bitbank to GoPax, which is an exchange, oddly enough. Then you convert the Bitcoin to Stellar for a 7.7% profit. The same exact trade, but if you just started on the Fisco exchange, would net you 8%. Or the same exact trade, if you started it and you routed it through Zaif, would net you 10%. If you exchange the Bitcoin for Ripple instead, the gain would be over 13%. And that's just one trade. Now, personally, I think I could do a whole hell of a lot better than 1% a day making these trades. But I don't want to do all that work. And to do this at scale, you would need to open up a dozen accounts on all these exchanges and fund them with at least either Bitcoin or US dollars. And then you'd have to track down the coins on all these exchanges all day long. I mean, that'd be a full-time job in and of itself. And heads up, if you're moving money between these accounts, like you're going to need to all day long, you will make a mistake. If you do not copy the address you're sending to exactly right, your money is going to disappear. And good luck tracking it down once it's lost in cyberspace. I mean, who are you going to complain to? The SEC, the FTC, NFA, CFTC? No, it's unregulated. You ain't got anybody to complain to. Now, the great thing about this 1% account is it solves all these problems. The trades are placed automatically. All you have to do is sit back and collect your money. A steady 1% every day. And look, I don't think situations like this happen more than they pop up about once every 25 years or so. And right now you can still open up your own account, but I don't know how long that's going to last. Another arbitrage startup was supposed to open up to the public, but the founder changed his mind. Here's his quote. For arbitraging, it's a little bit hard because if everyone is making the same trades, then the spreads go away. We've leaned backwards towards using it privately. Translation, we're making a boatload of cash and we want to keep it all to ourselves. Media outlets are starting to catch on too. And people are already starting to get rich off this. Even the academic world has started to take notice. This is a 91-page study done by researchers at MIT and London School of Economics. The fact is, spreads like this will not last forever, but there's still time to make a ton of money. Jason Flack is one of the leading experts in the cryptocurrency arbitrage space, and according to him, things like this will be like this for at least another 18 to 24 months. Here's his quote. The market is definitely not evolved yet. The next 18 to 24 months, I'd say you're still going to see these massive spreads. Once regulation starts to evolve, you're going to see this all even out. So we have a limited window to take advantage of these opportunities. With stuff like this, you want to get in as soon as you possibly can because it compounds daily. And this makes a huge difference on the back end of your account. Let me show you what I mean. Let's pretend that it's only going to last for 18 months. Let's take Jason's lower number, not his higher number. Let's be conservative. And let's say that you want to risk, say, $5,000. That's how much money that you were going to put in, okay? At the end of 18 months, if you reinvested your profits and you never took out any money, it would be worth around $265,000. All right, now, let's say that you're not sure. You're a little gun shy, so you want to wait 6 months to see how everyone else makes out before you put your money in. That same $5,000 would only grow to $70,000. Those 6 months of waiting is going to cost you almost $200,000. That's a huge difference. And here's why that happens. It's because your money is compounding daily. You're not just earning 1% on the money you put in. You're also earning 1% on the profits you made yesterday and the day before that and the day before that and the day before that. It sounds crazy, I know, but that's all it takes. Just 1% every day, or to be exact, 0.735%. And you'll multiply your money up to 53 times in 18 months. All right, so let's get to the details because I know you're probably sitting here and you're probably thinking this because this is exactly what I thought. Okay, there's got to be a catch. What is it? And I'm going to take a quick drink of water and tell you what the catch is. All right, everybody ready for the catch? Here it is. The swing, the pitch. Opening this account and getting your money from the bank into this arbitrage robot is an absolute royal pain in the ass. It is by far the most complicated account I've ever opened in my life. I mean, I don't claim to be the smartest guy in the world, but I've opened up a ton of different trading accounts: stocks, options, futures, Forex, bonds, you name it, I've opened it. I've done private placements, angel investing, venture capital deals, ICOs, IPOs, CTA, hedge funds, CPOs. I know how to open up a trading account. Guys, I'm telling you, if I did not have someone holding my hand every step of the way of this process, and I mean literally watching my screen and going, okay, Hubert, click here, scroll down, accept, copy that, paste that, write those down, check the first three and the last three, I would have messed up. I could not have done this by myself. There's just no way. Here's what you have to do. This is the process to open up an account. You guys ready? I'm rotating between water and tea here, and it's working like crazy. So everybody get a pen and paper. When you're ready, say ready. All right, and then I'm gonna start. Oh, I'm gonna put it in another hall. See if I can just OD right here today on halls. Let's see how it goes. All right. Much better. All right, here we go. First, you need an account with one of the major exchanges like Coinbase, Gemini, or Kraken. And you have to verify your identity with your smartphone or by holding up your driver's license in front of your webcam. Then you have to link your bank account or wire your funds in. You're going to buy Ethereum, and then you're going to create a new digital wallet. You're going to keep track of about a dozen passwords and secret seed phrases. And then you open up another account with the crypto robot. Then you're going to use either Google's two-factor authentication or Authy. And if you've never used either one of those programs, it's an app that gives you a new password every 30 seconds. Okay. Then you're going to link your digital wallet to the crypto bot. You're going to set up a VPN, which stands for Virtual Private Network. You're going to then send Ethereum to the wallet using your 41-character mu code. You're then going to transfer the coins into the bot account. Trade them for the proprietary coin, send the new coins from the exchange to your wallet, and then transfer them to the bot. Then you activate your account, and dear God, I hope you don't make a mistake, because if you do, your money is going to go bye-bye. Everybody get that? Piece of cake, right? I tell you what,